Okay, it's Wednesday, February 27th, 2019. We're looking at the pound dollar, so I'm going to review the open trade that we have right now with the trade copier, but I also want to review a few other uh, things that look like possible setups, but I stayed away from them. This is the dollar Swiss. This is the 1 hour time frame. So if you were watching this one waiting for a possible, or for me to trade a possible breakout, there was a signal candle, but there was divergence in the indicators, larger time frames, identifying the possibility of this reversal right here. So I did not short this. I did receive some questions about why, what if this was actually a valid continuation breakout trade, why didn't I take it if it was? So it was the signal here on the 1 hour time frame, but as well, I always say this every single time. I highly recommend looking at the 4 hour and the daily chart. You just step back and take a few moments to just make sure that you're trading in the right direction. Sometimes, and again, depending on how many continuation breakout trades have been in one direction. For example, if there's been multiple continuation breakout trades to this downtrend here that we see, that's been in place, let's say for about a week or so. This isn't the scenario or the case every single time, but this is what I would be looking for. When you step back and you take a look at the possibilities of getting into another continuation breakout trade, it's possible that you could be getting in one at the end of a trending move. And if you don't stop and take a few moments to look at the 4 hour or the daily chart, it's possible that it could be running into a major support level, and then it bounces and you wonder why didn't it work, even though it was a valid signal on the 1 hour. So I look for these signals on the 30-minute, let's say, for example, with an HL30 or a breakout on the 1 hour time frame, but I still take a few minutes to look at the 4 hour and the daily chart to make sure that I'm not running and trading it into a major support or resistance level where it's just going to stall. So I stayed away from selling the dollar Swiss. I am waiting for a possible breakout here on the euro yen. This is the 1 hour time frame. It did spike up above this week's high. There's a tweezer top right there on my charts. It didn't close above that high, so I didn't trade it any higher, but I'm still waiting to see if eventually maybe we get a continuation breakout trade to the upside. At that point, I would still need to confirm the signal with the indicators, but I don't have it just yet. And as far as selling it right now, I'm not ready to sell it either. So that leads me to the open trade that we have right now. We've got an open trade here on the pound dollar. So in case you're wondering what that one was, it was moving up this morning during the New York session. I waited for it to reach a top up there and then show some divergence in the indicators. It's only going to go so far on certain days. We all know that. I mean, every time we look at a rally or we look at price, if it's going to break out, there's got to be a reason why it's breaking out. Why is it moving? Why do we, or why would I expect it to continue to, let's say, a 55 pip target if there really isn't any economic data supporting it or anything like that? If there is a breakout due to economic, updates, or whether it's non-farm payrolls or whatever the case is, even political statements, things like that. If there is a reason, and we can see that breakout, there's a reason to suspect that it's going to continue to go and trend in that direction, then of course I would trade it. But again, taking into consideration the daily average trading ranges, when we see it moving for no reason at all, looks positive, and you're tempted to get into the trade, but it doesn't go anywhere, you have to ask yourself, why would price go another 50, 60, 80 pips or something like that if it's already covered 60 or 70 pips or so. But that's really what I was looking at this morning, is that price was still moving, but eventually it was going to reach some cap or some point where it was going to stop, and then I was going to be able to clearly identify the divergence. It's not really picking tops as far as just buying or selling as it goes through a price level. Very often with that fade the double zero trade, that's a little more trickier, and I am very selective when I trade that fade the double zero. When I trade that fade the double zero, I don't trade every one of them because they don't work. They are, they have their fair share of that technique experiences its fair share of losses. So I'm looking to remove the more risky setups with the fade the double zero and those reversals. This is a little bit different. I'm using certain indicators, and you've probably heard me talk about this quite a bit. When I look for reversals, I do use the Bollinger Bands. I use the Woody CCI. I use percent B and band width, those two additional indicators, to help me confirm that I'm actually looking at a point in time where price is hitting a high for the day or a low for the day, and it's likely to reverse. Now this one's taking a little bit longer and it's moving, slowly. I don't know exactly where I'm going to close out the trade. Initially, I had it targeted at about 80. That's a psychological level. It may go lower. I'm going to continue to manage this trade. Right now we're positive on the trade. It's just a matter of waiting. We're trading through the Asian session. There's not a whole lot that anybody can do about it at this point. We just wait. So I will keep an eye on it. I'm not exactly sure what the profitability is going to be in this trade, because as we approach the London session, I don't want things to change and turn around and go up, the opposite direction. But at this point, it was a relatively easy trade to identify that top. Again, I'm not selling just because it goes through a price level. I really need to see divergence. I rely on these indicators heavily. I will alternate and go through the 30-minute or the 1-hour chart to try to find that divergence. Sometimes the 30-minute will give me a better entry. I can pinpoint the entry a little bit better. But looking for reversals with divergence and using these indicators, I generally can get away with using really small stop loss placement. And when I say small, anywhere from 15 to 20 pips, and sometimes even smaller than that, because I wait for price to stall. After that activity in the morning, we've got economic data out of the way, and then I can really rely heavily on these indicators, and I switch through between the 30-minute and the 1 hour to try to pinpoint the entry. So I wait for specific candle patterns as well, but I'll talk about that in the next update. So I don't know when I'm going to get the next signal or trade. This one, again, we are positive on this trade. I don't know how much longer I'm going to hold on to it, and we'll see how far we can get price to drop. Where we take it to, and then I will be looking for breakouts. We've got non-farm payrolls, a lot of other things coming up this week. So we'll see what happens. I'm sure we'll watch price get kicked around quite a bit, and we'll get an opportunity to trade those. And sometimes I will wait until later in the New York session to wait for setups like this. Sometimes it requires for me to just sit out some of the activity. If I can't tell where it's going to go or how far it's going to go with, let's say, economic data at 8:30 New York time or something like that with some economic reports, I'm just going to have to wait. And I get that opportunity sometimes around noon New York time, around lunchtime. Every day it's going to be a little bit different, but this one was relatively easy. I just have to wait. It's a matter of watching it and waiting for it to stall and then printing the confirmation with the indicators.